Aloha, ladies and gentlemen. We are going to be looking at weekly chart review for the week of February 13th through February 17th, 2023. Not only will we look at some weekly charts, we'll also look at some monthly charts. And I want to thank you for taking the time to watch this video. It's roughly been about getting close to 12 months where I began this project of I Have Success. And one of the best things that it's done for me is that before I began doing I Have Success, my mind, when it comes to the stock market, was really focused on what works for me. And a lot of things that I had learned over time, I had just totally disregarded because in my living situation, Hawaiian Standard Time Zone, with my work schedule, lifestyle, all these things, I just really honed in on a strategy that really works well for me. And actually, this strategy that really works well for me will work really well for you too. Now, what's the downside of this strategy? There's all types of upsides that YouTube will have tons of commercials and tons of people pumping up the upside of their strategy. But what's the downside? There's always a downside. The downside to this strategy is that it is slow, right? This is definitely being the tortoise. You are the tortoise. You will not get rich quick with this. Not at all. Sometimes people would probably scoff at the amount of money that I'm making on certain trades that I do. Nonetheless, I let the scoffers scoff. Like, to me personally, I don't care about other people's opinions on most things. That's just me, you know. I really don't care. And the reason why I don't care, especially relating to this, is it works. This 100% works. If you want to find out more about it, again, it'll work for you in whatever time zone you're in, whatever lifestyle you have. At the minimum, it's something that you can use to kind of be like a backdrop, to be something that you don't really have to monitor that much. And then you could do more sophisticated trades on top of it. But you can have like a solid foundation that doesn't really need a whole lot of management and tends to be kind of difficult to lose money at. But, you know, that trade-off is going to be that it's slow to make money. So if you're interested in that, go to the link in the description below this video for ihavesuccess.com and check out the website. Just read through it, and you'll be able to figure things out. And if you can't figure out what's going on this website, then this strategy is probably too complicated for you. Sorry to say that, if that might be true. This strategy is easy, but it's not simple. There's moving parts to it. So if this is too complex, you know, what can I say? It definitely is for everybody that has enough cognitive ability and has some discipline and can, you know, study a little bit. So with that, let's get into looking at the economic calendar coming up for next week, and then we'll look at some charts and we'll go from there, okay? So here at forexfactory.com, here's an easy to follow economic calendar, and I have the things going on in the US, in the Euro, maybe that's all I have right now. The things in red are going to be potentially bigger market movers. So on Tuesday, we have this PMI, Producing Managers Index. And Forex Factory says it's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So that could potentially be some market moving information. This one on Wednesday, might be a bit more. It's the Federal Open Market Committee, and it's a detailed record of the FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. So one thing to keep in mind, as I have mentioned before in these videos that I learned from Robert Kiyosaki, is that Robert would say, how many sides does a coin have? And generally speaking, people think about it and they say 2. I learned this a long time ago, so I don't remember what I first said, but when I talk to people about it, they'll generally say 2. And Robert points out that there's actually 3 sides to a coin. There's the head, there's the tail, and there's the edge. And what he says, that to be a good investor, our job is to stand on the edge and look at both sides. Look at the head and the tail. And you know, I was born in the U.S. I grew up in the mainland. Grew up in Michigan. Moved to Hawaii in 2000, and I can definitely attest that for most of my life I was very polarized. Even to now, sometimes I notice I'm very polarized on certain opinions, and that isn't the most lucrative way to be when it comes to trading and investing. To really be standing on the edge and look at the heads and the tails and make decisions with looking at both sides of the information is really important. The reason why I point this out is that these numbers will be released. These numbers will be released, in all this information. The core PCE, we'll read what that is in a moment. But all this stuff will be released, and it will be released and talked about as if it's fact and as if these certain sentences are facts. And they might be, right? Personal consumption expenditures. Personal price index. Right? Why traders care. It's the Federal Reserve's primary inflation measure. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment. Okay, so the reason why I bring up 3 sides of the coin. When we read this and we get these numbers, that's one side of the coin. Right? Just remember, there's 3 sides of a coin. Do with that as you will. So we got some economic things going on. Tuesday, Wednesday, Thursday, and Friday. Could be some volatile times in the markets. Could be. Going forward, I'm not sure if I'll get to it this video, but what I had been doing in the past is kind of like top-down analysis, where I was looking at the general markets, then we look at the indices or the sectors of the markets, and basically like that. So from listening to Brian Shannon interview, I listened to it probably 4 or 5 times actually yesterday, and also just happened to listen to a Mark Minervini interview. Was it today or yesterday? I can't remember. I listened to that Mark Minervini. I went on a little binge of listening to Mark Minervini afterwards. But Mark Minervini and Brian Shanahan both, in this weekend, I have both heard them say that they do top-up analysis, to the point where Mark Minervini was talking about doing, when he was doing top-down. Did I say top-up? Bottom-up. When he was doing top-down analysis, he was kind of like missing it. Mark Minervini has a trading style that's like closer to William O'Neill, and from the Business News Daily, something like that. So it's his book. One of his famous books is like How to Make Money Trading Stocks or something like that. The whole cup and handle thing, can slim strategy. So both of these gentlemen were talking about looking at bottom up versus top down. Now, as I was talking about in the beginning of this video, before I started doing this stuff at I Have Success, I basically just traded in my own little realm. Right? So making these videos is getting me to look at things differently. So I'm gonna change it up, and we'll take a look at some bottom up things, either in this video or the coming videos. If you don't really like doing any of this stuff, I'm telling you what, man, you can really just almost ignore everything and just do this. This really is dialed in. Like, that's why I wasn't really paying attention to too much stuff, because it's just selling cash secured put options on stocks that I wouldn't mind owning, and then if I get assigned, a lot of times I'm just selling covered calls on them. It's like, it's pretty cut and dry. Like, for years I was doing the wheel strategy without looking up, down, left, right, anything, right? Just doing the wheel strategy over and over and over. Anyway, so let's get into doing some stuff. Right now we're looking at these different sectors, and we got a 3-year chart. So in this little box here, we're seeing 3 years, and each candle is 1 month, right? So we're looking at 3 years, and they're 12. These 3 sectors of the stock market make up quite a bit of the S&P 500. I would say maybe they make up about 50% of the S&P 500. Can't quite remember off the top of my head, but this is like around 24%. This is like around 15, and I think this is like maybe this is almost 15, and this is a little bit over 14. So it's a good chunk. And we see, since each candle is a month, you can see the 2022 ending here, right? 2020 ending here, 2021 ending here. So from during 2021, we had this up market, and then 2022 down. Now it's peaking back up. We got our 2 candles here. This candle, obviously, we're looking at, one reason why we're looking at this, we're about halfway through the month, right? And you can see that prices for this month went all the way up here, but pulled back. So at the moment, you can see maybe it's hitting this resistance rating here. What is that telling us? Well, we opened higher than this candle, but there's some sellers. There's some people that when it starts getting up here, some people or institutions, whatever, start selling, and our volume overall has kind of been low. So, are we out of the woods as far as the bear market? We got a little bit of going sideways here. We'll see. We will see. The fact that we got this high wick to the top, that is a bit of a bearish thing. But what is a little bullish is at least where we opened above last month's candle, and we're above the 200-day moving average, for whatever that's worth. The healthcare sector, you see, didn't drop down as much. It dropped down. It kind of went more sideways-ish down, but it definitely went down last year. And it's been pulling back this year, just pulling back to that 200-day moving average. Over here in the financials, and something else that's worth noting is the high of 2021. We're not too far off from that. In fact, we tested that high right here, and then we sold off, right? Just like we sold off here. We're not really that close to the high over here. Getting there, closer than 30. It was around 41.70, almost 42. And kind of going sideways right here, but 36 area seems to be giving some resistance, which is probably somewhere in the line of right in there. We got another candle right here for utilities. Let's say utilities, sorry. Industrials that's opened up above that candle and pulled back just a little bit. Kind of had to sell off. This had a pretty good run to the top. It's getting close to that top of that range as far as getting close to the high. Basic materials, similar, right? Definitely been moving up kind of strongly, where we had this green candle to the upside last year, then a down, then a up, but this candle this month is looking on the red side. Over here in communications, which is like there's some overlap in these different sectors, which since I've been doing some research on doing this what stocks to look at for bottom up, I'm noticing there's a lot of overlap. So we're going to end up finding out, which companies could be debatably said overweighted, but definitely have a lot of pull on which way the market's moving. So in a way, it's like if Apple's moving up or down, it seems like the indices, right, the sectors, when you look at these ETFs, it seems like that has a lot of pull on it, and that might not be the movement up or down of Apple might not be the same as like if you look at a broader sector segment of the stock market. So communications down, kind of bumped up a little bit. Look at that. You see that little wick? I know I'm not zooming in here, but you see how that wick up to the top, selling off. And then energy. Look at energy. For the last, X amount of months, kind of been selling off. But look at this, where if you look at it from this 3-year monthly charts, and basically still in a bull trend. Over here in the consumer discretionary, sold off and trying to pop up, but you can probably see similar to that high wick to the top. Now again, these candles, these are not done forming yet. These are candles for February, so we're, someone could say that we're looking at it prematurely, and they would be accurate. Now we got a doji, right? See this one? It open and closing at the exact same spot. This is giving us an idea of indecision or running out of momentum. I would say in this, put together with all the other information here, I think it's more indecision, in my opinion. Almost got a doji right here with utilities, but you see utilities kind of the uptrend may be violated, but it had been an uptrend, kind of pulling back. We'll see what happens around in this area. Real estate, over really big sell-off in 2022, making its way back, but not only is it a red, not only is that candle red, but you see that wick to the upside. And we got a similar look over here with retail. Retail, I don't even think, I'm not sure how much of the S&P 500 retail even makes up, but it's I think overall the top sectors making up S&P 500 are these 11. But I figured, what the heck? There's another sector, and it would make it balanced right here. So that's good for me. So what do we see kind of going on? If just taking a quick look at the moving averages, I think that it's got some more work to do. When we're looking at this bigger picture, there's definitely more work that needs to be done to the upside to have a strong conviction that we're going in a bull market. So why don't we try something a little different here? And we will do it like, let's try it like this. So we'll start with, how about the S&P 500. Where did you go, Mr. S&P? Did I do it for S&P 500? There we go, S&P. So here's the top. These are the top 10 holdings of the S&P 500, and we'll end up noticing that Apple, Google's in here twice with different things. Maybe Amazon, Meta. I think we're going to see these names popping up quite a bit. So Apple, what do we see going on? And let's switch this over to weekly chart, since this is a weekly chart review. What do we see with Apple going on? Besides that, I have an open position on Apple, which is not a recommendation, because you have no idea what this position is, and that's pretty much it. All you know is I have an open. Let me get off that. All you know is I have an open position on Apple. So we see Apple had a high here. It's been moving back up, and kind of got stuck in this range around this 150. Right? Look at these three little wicks to the top. Right? So it's showing that it's coming up into this area, and then sellers start stepping up in there. So what's that going to lead us with? We'll see, right? But right now, we got this big bull candle right here. And last month, we couldn't get over that, but it is in the top 50% of that. And now this month, still, we tried to get over to the close of this big bull candle here, but sellers pushing it all the way down here. So kind of going sideways. Microsoft. I did say it's weekly, but we're looking at three year on the weekly. So Microsoft, we got a bit of I see a quick W formation here, right? We got a bottom here, and this one is a little bit higher, And as far as like crossing this point of the W, let's make this a little bit thicker. Where we got? So you got this W, right? And as far as crossing right there, it's crossed, but pull back, right? Pulling back right. It's not right to here, but look at this. Pulling back in here. Okay, so this we're getting up in this area and selling action is coming in. Again, we're not done with this month, but we're about halfway through the month, and this is the way the candle's forming for us. Amazon. Amazon, with a quick look, you know, Apple and Microsoft looking more bullish than this. This is not screaming bullishness to me. I got a low, or there is a low. There's a lower low. I guess it could be debated that there's a low, there's a higher low. It could be debated. Came up here and tested this 200-day moving average and sold off. Got right in here in this area where you got all this congestion right in here around the whatever 100-ish area or whatever that is. No, it's not 100. It must be around 110, and pull back down here to 100. So in order for if we see Amazon in multiple sectors of the stock market, and at least as far as the indices and like the S&P 500, we're probably going to need Amazon to be breaking out of this 110 area. If it's not breaking out of this 110 area, then it's putting some downward momentum on stuff. Facebook, now formerly known as Facebook, now currently known as Meta, came up to this area right here, and boom, had this big bull candle right here. But look at this, selling off. That doesn't mean it couldn't go the other way, but this is not screaming bullishness. These two candles right here are not screaming bullishness. It's sort of kind of coming down to this 50% mark, right? If it comes back and starts drifting back down here to around this 150-ish type of area, then that's not looking too good. Now Google, right, which is done twice, and they're basically look pretty close to being the same. Right, so this is a good time to just kind of figure out, like, what does this mean, right? Is this stacking the deck a little bit? Is it debatable? It's at least debatable, right? Why would you need to have Google twice? If this is the S&P 500, if we're supposed to look at a broad market, you know, and we've got this, you know, where these are the top 10 holdings, right? They're all basically kind of like in the tech sector and in the communication sector. So we got a bank, Tesla, I don't know where that falls really, Nvidia, I think that's tech, Berkshire Hathaway. But what about, you know, something like food, or, you know, what about something representative from other sectors? Anyways, just something to consider. And so why consider those? For two reasons. One, you know, the head, the tail, and stand on the edge. When people talk about like the strength of the economy, maybe the stock market's not quite really reflecting that. Maybe the stock market's reflecting the strength of these. At least the S&P 500 might be reflecting the strength of these stocks right here. So if these stocks are going up, it doesn't matter if the economy is going down. The S&P 500 is going to probably go up, right? So you can kind of you gotta read between the lines a little bit when you're trying to make these Sherlock Holmes decisions for yourself. So Google really dropped down, had a big sell off here, right? And it did it in two places. So that's putting some pressure down, at least on the S&P 500. We are not at the moment. You know, it's like it tried to do this W. Seems like it tried to do this W pattern through here. And no, it got rejected. It came up right here. Boom, rejected down here. Now, I mean, I guess it could do it here again. And then we have a series of... But if it doesn't do that, and our long-term trend is telling us it's not doing that. Came up here and tested this 200-day average and got rejected. Berkshire Hathaway just basically kind of cruising sideways a bit, right at the moment, right? For the B shares. And we got bottoming here. Here's our little W, but it's not really breaking out. I guess you could say it broke out, but it's not showing. It's not breaking out past this point of the W. It's showing super strength to the upside, right? It's basically kind of forming this other W right here, right? Whoop, whoop. Ah, okay. This part lower than this part. Now it's just going sideways. So Tesla, we see had these been in a downward trend, and it's just trying to break out of this 200-day moving average with a nice strong candle up here and continuation of these candles to move it forward. But maybe it's going to start running out of steam once it starts hitting in this area. You can see in this area here. This is a weekly chart, so let's take a look at, I think it's right here. Whoopsie, that is not what I wanted to do. All right, that's okay. It's right here. Oh, snapples. You know what? Let me do this. My apologies about that. All right. This is what I want right here. Oh, good Lord. Oh my. There. Gosh. What the? Oh, I know what's going on. Sorry. Oh boy. Here we go. That took a whole lot longer than I wanted. And we're not even on Tesla anymore. Okay, there we go. Tesla. All right. So, what was the whole point? I forgot what my point was. I'm just going to go this way. Oh boy. Okay. So what were we looking at? Were we looking at Tesla? Oh yeah. Okay. So all this what do you call that? We got prices overlapping. It seems like this is a place where it might run into some resistance. And what is that? Between 200 and 250. So let's go over here and look at these volume profiles. Right, 200 to 250. All this. When you see how it's moving out this way, this is showing it's basically showing volume of transactions, right? There's a lot of volume of transactions right here, and this is between the 200 and 240 area. This is on a daily chart though, so but we also have a lot of volume of transactions down here. So kind of the spot that it's stuck in the middle right there. See if we can gain anything on here. Not really. Let's go a little longer out. Maybe that'll help us. What, 10 years? Nope. That is not. It's not making my life any easier. How about take a look at 3 years? There we go. I can see something a little more. All right. So, yeah, I think. When in doubt, if we kind of get pulled into here, right? There's not as much in here, and maybe that's why we see like this gap, right? So prices were trading down here, right? Kind of makes sense. It's up here. Prices kind of get stuck in this area, which is showing that there's a lot of volume of transactions here, and then through this part drops down, and why does it drop down right through here? I don't know if this is the reason why, but this is correlating, right? It's showing a drop down here, and based on looking at this volume profile, we wouldn't expect there to be much support here. But look at this. When we look over here, prices again around this. What is that? That number right through here, around 150. Right. See through here, 150 to about 120ish. Right, which is right in this area. But prices drop all the way down here, and then so basically what I'm trying to get at is it's not too surprising if it gaps through here and kind of bounces back up there. So looking at the volume profile, I wouldn't doubt if prices kind of stay in here, which is volume profile is telling us it's probably going to start running into some resistance around 230 to 240ish. And if it runs into if it's running into resistance around 240, 230-ish, we'll see what that does around the 200-day moving average. Nvidia definitely over that, right? This is looking stronger. It looks like Tesla a little bit as far as these three, that big move up. We got our W here with this right hand definitely being higher than the left hand, and this really has broke up above it. So this particular stock is probably looking the strongest out of those. And JP Morgan Chase, we got some strength through here, pulled back, and just kind of fluttering right through here. So I'm not going to go through more. We looked at quite a bit, but through that's what the S&P 500 is doing. Usually I'm looking at this on a line chart. That's what this channel was for, this line chart. This is kind of the downward channel through 2022, and it's definitely broken up above it. And as I've been saying on these videos, I've been kind of waiting to see. Let me clarify waiting. I'm taking action. I have positions open. I'm opening more positions. But at the moment, I'm of the mindset that we're in a sideways. I'm of the mindset that the highest probability, the market can trade in three directions, right? It can go up, it can go down, and it can go sideways. I know some people say it can really go in five. It can go up, it can go really high up, it can go down, it can go really high down, or really low down, and go sideways. But I'm just going to keep it simple, right? Up, down, sideways. So at the moment, and for at least the last, I don't know, maybe a couple months, at least since November, December, I think, I've been thinking that we might see a sideways market. I thought that maybe we'll grind sideways out of a bear market, and at the moment, that's still what I'm particularly seeing. So when I say I'm waiting to change my view. Depending on if we are in, I'm waiting to change my view as going into an up market based on what happens through the about 420 to about 440-ish range. And when we look at the daily chart, we see that a bit more, right? Let's get that stuff out of there. Look at the daily chart. We see it's 420 to 430. Now, so far, when we talk about what is it going to do, or what's going to happen around the 420, well, one thing that could happen is it never makes it. And so far, that's what's been happening. It has not made it to 420. It's tried. It got up here, and look at this. We've kind of been going down this way. How does that reflect on the weekly chart? We see here's that week that it tried. It got up there, and we've been floating down since then. But we are above the 200-day moving average. I don't know how much that's really worth, but people believe in the 200-day moving average. It's more likely that there's certain people that definitely won't buy stocks if they're not above the 200-day moving average. But you can see right here at look over here at the high, right? The H. On this week, the high was 427, and then on this week, 430. So now let's say it never gets, it just keeps getting close to 420 but doesn't make it. Well, then if it can't make it past 419, if it can't get above 420 and continue to close above 420, then we're definitely not in a bull market, right? In order to be in a bull market, we would have to go up. that is kind of part of being in a bull market. This has got to go up. And right now, it seems like, at least for these last 3 weeks, it hasn't been able to go past 420. And I even thought it probably would touch 420. Was it last week or this week? I can't quite remember. But I wouldn't have been surprised if it did, and it didn't. And so, to me, that's showing me a weak bull, if anything, right? If it is a bull, it's a weak bull. And we really seem to be in this. Let's zoom out just a little bit. I'm seeing kind of like in here. Where are some things here, right? Definitely got something here. If you bring this all the way across, this, right? It's not too far off from here. So we got starting here, low, higher, low, higher, low. This area right here, it's not too far away from this area, and this area is kind of in between these two. Look at this right here, which is almost right in coinciding with these, which makes sense that that would be right there too. And kind of looking this way, we see some action through there before. So I'm still of the mindset that if depends. Ooh, pardon me. Depends what happens. Our bullish, our argument, or a person's. I'm not making an argument for any particular direction, right? What I'm just to have the video very, very clear. What I'm attempting to do is analyze information and try to forecast the most probable outcome, the most probable outcome, the least probable outcome, and the outcome that's in the middle. Why 3? Because as I mentioned, the stock market can go up, it can go down, and it can go sideways. That's it. So what's the most probable outcome right now, right? Because the stock market had been going up basically from here to here, which is about from about October of last year, starting moving up. I get it, there's a pullback here, but it wasn't much of a pullback. Hit right in here in this range where we seen a pivot before in this 375 area. So speaking of that 375, I wouldn't doubt it if it dropped down to this 375, right? That, and I don't mean next week, but I don't, over the next couple weeks, couple months or whatever. It wouldn't really change things too much if it pulls back to 375. And I've been waiting to see what's happening up from 420 to 440, but also what's going to happen at the 400. And we seem to be floating down to the 400. Right, and then the same. Now, whether it goes up or whether it goes down, the speed of which it moves through there. For example, how many weeks did it take to drop all the way down here? 1, 2, 3, 4, 5, 6, 7 weeks. It went from about 450 to hit a low of a 380. Right, so it took about 7 weeks. Right, 2 months. Roughly to drop down there. So it can kind of float through there, but if it falls down, starts falling past 400, let's see if it drops down with big candles like this, or is it going to kind of float down with candles more like this. And the same thing, if it's moving up, is it going to move up with big candles like this? Is it going to look more like that? Or is it going to kind of look more like this? That'll kind of give you an idea of like the strength. Now, through this part right here, we had some goosing of the stock market, low interest rates. There was this is not normal stock market fundamentals that's causing this to go up, but it still went up nonetheless, right? So I'm not saying the stock market's a bad thing. All I'm really saying is be informed of what in 2023, what moves the stock market up and down. And are those things in place right now? When these things went away, the stock market kind of started going down. So yeah, I hope that, I don't know if that's helpful to you, but I'll tell you what, it is it is 100% helpful to me. It definitely is, because what I'm seeing is I'm just seeing sideways right now. Look at this, right? Well, let me draw. Get this out. Look at this. We're basically in the sideways range right through here, right in here at the moment. With I think around on the weekly chart around 425 to about 375 would be the range to watch on the weekly. On the daily, it's about 420 to 400, right? And looking on the daily, like this was our we see make sure it's okay. We see it started like testing to get up to that 420, and couldn't make it. Now it's dropping off, and seem to be getting some support right here in the 405. So we're kind of right. It's like almost right in the middle between 420 and 400, because last week it closed at look at this C, right? Look right there. Look right there right now. Closed at 408. Right, the week before that, it closed. Look at that C at 413. Right, the next week drops down. It closes at 408. This week it closes at 407, which we see right here. So, it's like I don't know what else to say besides it just kind of seemed to be going sideways for me. Oh, you know what I could potentially say is that if you are trading directionally, right? If you the one of the beautiful things about this trade here, selling cash secured put options on stocks you would be happy to own. One of the beautiful things about it is that it kind of doesn't matter which direction the stock market goes. Right, you'll change things up a little bit, but for the most part, like there was a time when I did this strategy on a $6 stock. I bought the stock, maybe it was at $5.50. I sold put options. I bought that stock at $5.50, right? And let's pretend this is the $5.50 mark, and the stock dropped. I don't know how far it dropped, but it was definitely it was well below $5.50. I don't know how low it got, but it took it was like a year and a half before it got back up to wherever, back up to like $5.50, $6. And at an initial glance, you might think, wow, Brent, like you lost money. But you know what? I never lost money for 3 reasons. One reason, I bought you don't lose money until you close the position. So I opened the position at $5.50. I closed the position at $6. So yeah, I get it. For about a year and a half or so, I was sitting there on dead money, right? And you could say, well, you only made 50 cents per share, over this year and a half. That's true, and then a good follow-up question would be, well, how many shares did you have? Which, in a way, it kind of doesn't matter. So let's keep that. But that would be a good follow-up question. So technically, I exited that position at a profit. But this is really the really important point that I want to point out to you. 3 things, right? Right? I didn't lose money because of 3 things. Number 1, you don't lose. You once you close the position, that determines whether you lost money or made money, right? So just keep that in mind. If you're sitting on paper profits, right? You're literally you can't put gas in your car with a paper profit. You need to have a real legitimate profit. So the other thing is that for that year and a half, I was selling covered calls, and I was collecting dividends. And throughout about a year and a half, this isn't anything so spectacular, right? I get it. But I cash flowed this stock about $1,500. The whole time it was lower than the price that I bought it at. So that was literal money that I could take and fill up my car with. About a year, let's say it's about a year and a half. So what is that? About 18 months. So we're looking at, if you're thinking I lost money, no, actually I was cash flowing to roughly about $83 a month. So that's the beauty of this, right? $83 a month. My phone bill is $55 a month. My car insurance is $87 a month. My electric bill is usually $60 to $70 a month. Huh. Right? Is it starting to click a little bit? I hope so. Right? Even though technically I was underwater, I had enough shares of this asset to be selling covered calls and collecting dividends that on average I averaged out about $83 a month. So I think that's very protected. And then eventually, because I'm doing okay at picking good stocks, eventually the stock came back and I was able to sell it for a profit. And the stock trades around $5 to $6 today. It just happened to go down in a bit of a slump. And it's a stock that I would definitely do again. So with that, what do I think is going to happen in the stock market next week? I'm not 100% sure. But I think it's possible that we could possibly test this 400 range, but also maybe we could move up a little closer. If next week, every week that we don't go to 420, then the probability of the up market becomes the third most likely. Every week that we don't go up here, right? This week we didn't go up there. Now it's kind of just been going down, right? Now it really dropped down this week. Are we on a weekly? We're on a daily. Sorry about that. Let me remove that. So looking at the weekly, which gives us a little bit better of an idea. So if I pointed this out, but we definitely have this this W pattern here, right? But look what happened when it got to needing to get above this. It's kind of going sideways now. High, lower high. It's kind of like a lower high, but it's also being met with a low, higher low, higher low. Maybe, I don't know. Low, lower low. Excuse me, high, lower high, lower high, lower high. It's kind of maybe right in there. So yeah, I'm still I think at the moment, unless things change, and I'm watching to see if things change, right? At the moment, I think the strongest scenario is sideways, at least for the next week. I wouldn't doubt it if for the rest of the year, if we ultimately have kind of a sideways market. It wouldn't surprise me at all. Right? I would be least surprised. So for the rest of the year, right, and I'm reserving I'm reserving the right to change my opinion, right? Change what's going on, but I think and I think this is my number one forecast, and these are my number two. I'm really hedging myself right here, but I think I could go up or down either way. There's a lot of bad stuff happening in the economy, but the stock market is not. It's disconnected from the economy. It might be a little bit connected, but it's not correlated like it used to be in the 1970s or something like that, right? So there's forces pushing the stock market up. There's forces pushing the stock market down. So, like if the government starts doing some sort of things like this, really lowers rates, does something like quantitative easing, we could go into a bull market. If the government doesn't do anything like that, we could just kind of grind sideways as like the plunge protection team helps keep it up. If the bad news in the real economy in the world gets bad enough, it could push things down. But until then, I think we're seeing some sideways thing going on. And again, if you kind of want to be in a position where you want to have at least one strategy that really allows you to like drop off the kids at school, go on vacation, go work a full-time 40 to 80 hours a week job and not need to spend without spending a lot of time in front of a screen, but you can still cash flow the market. And you know how I would point it out, like, hey, my car insurance is $87 a month. My cell phone bill is $55. My electric bill is usually somewhere between, I don't know, state of HECO did some goofy things lately, but generally, let's say it's somewhere between 60 to 75, right? And I showed you how I cash flowed for about a year and a half, about $83. I could cover any of these bills with that 83. Now I get it, it's not taking out tax or whatever, so give me a little bit of wiggle room. But I think you see how and I was doing this strategy exactly. This is 100% what I was doing in order to do that, and it's wonderful. It's really, really wonderful. So check out this stuff. If you like it, take some action. If you don't take action or take whatever action you want. Hope you guys have a fantastic day. Aloha.